Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the World Series of Trading, boys and girls, because we are in the 10th round of a 10-round fight. And we have the Standard & Poor's S&P 500 E-mini showing up on the board there. If you notice, we had a predicted low today coming in at 39.47. The high was 39.47 and 1/2. Now, the $64 question is, how does this all relate? If you'll notice here on the chart, you'll see the downswings we had at the 382 retracements. We've been talking about those each day here as they were happening. I think you'll all remember that. I know some of you are because you asked me to review this. You'll see what's happened. We came down to 39.47 today and a half. And what do you think happened after that? Johnny's got his big card out there, and he's saying, I think it went to a 382 retracement. And let's just check and see if Johnny was right. And he's back there waving his little baton, and I think he's really happy because there it was, to the exact tick, 39.75, the exact 38% retracement of that 382 high that we hide right back here. Folks, these are the types of things that we're going to be talking about when I do the day trading class. Now, there's going to be a possible kicker, and that is I've got a really good chance to get John Jameson on for a little while during that time to show you how he trades something like this, because he uses the options market where he doesn't have to risk very much at all. At this spot right down here, when it was trading at 39.48, you could buy the call. I think it was trading for around $2,000. It expires at the end of the day, and you only had to put a $200 stop on it, and it's got so much volume that, believe me, a $200 stop in an option, which is 10%, is quite a bit. But when it got up to this level here, at 39.75, he could sell the debit side of that, sell the put, sell the call side of it, or buy the put is what he did, and he locked in on that particular trade. He locked in $800 profit no matter what happens. But if the market closes above 39.75, it'll pay him another $3,000 on top of the $800. Now, that is what risk control is all about. When you get 10-to-1 shots, well, you don't have to risk very much. Whether that's going to happen or not, I don't really know. But let me show you what we're looking at here with this Japanese yen, because let me just give you an example of the correlation here between you'll be able to see it here in just a second. These are things that, where the markets, it tells you where the money's moving, folks. They always talk about those risk on, risk off trades. Well, they do it through cross rates and stuff like that. This is the S&P versus the Japanese yen. You see the high correlation that's in here? It's certainly not perfect, but it's still pretty good. And that's what we're looking at right now. So all we do is when we're watching this is we want to go down and we want to look at the Japanese yen just to see what it's doing on the chart basis to tell us whether we think we've got a chance for some type of a move that would make the market go down. And all I have to do now is find it. And I've been looking at it all morning, and now I can't find it. Shut the front door and raise the rent. What did I do wrong here? And here it is. I did find it after all, and I've been watching it all morning. Several people have asked me about it already. This may or may not work, folks, but this is how the risk control game is really played. Now, look, we had the big top up here, 151. We come all the way down here. Look what's happened here. Over the mass, we've had a beautiful ABCDs. There's where we are. We are 10 ticks away from the 382 retracement of the whole thing in 10 ticks. I hope it comes on while we're on the show here, because I want to see, because if that hits and it doesn't go any higher, that means stocks are getting ready to rally, and we're going to hold that 39.47, and we'll see if that's going to work or not. Because if it doesn't hold, then this thing is off to the races, and you just can't stand in front of it. So that's what we're watching as we look at that. The main thing is that Fibonacci relationship right there at 39.47, rallied right back to the 382 at 39.75. So now the game is being played back and forth to see how things are going to unfold here. And that's the whole key of what we're trying to do as we watch this. I think I had this posted here this morning. I don't know if I got it up here in time, but I have had some things to do here in the neighborhood. Folks, we've got snow in the mountains behind us here, the 8,000-foot mountains. The kids are up there skiing from the college, and we actually had ice on the road early this morning. It's going to warm up today to about 62, but it got down to 29 last night here in the Pueblo, and that is pretty cold, believe it or not. Now, there's one other chart that's important, and I want to bring that up to you right now because it's happening as we speak. This is a chart which is the S&P cash market. Now, this was as of yesterday, okay? So what we know is that we are coming down now, and what we're looking for is it to get to this level right here, and I believe we hit it just a little while ago when we were at 39.47. I haven't updated it, but this chart comes to us from someone who trades the Hang Seng quite a bit, and also the S&P. He sent that to show us that number was very similar to what we were looking at in the E-mini S&P at 39.47. Remember, when it was at 40.47, we thought it looked pretty good, and it rallied 50 handles up to 40 and change, up to the 382, and then back down again. Well, that's what could have happened today too, folks. We went right up to the 382, market stopped on a dime, and then we'll see how it ends, from that level. So we want to pay close attention. Our guest today was supposed to be Mr. Peter Elides, but he has been swamped. He's going to try to sneak in if he can, but with markets jumping around like the way they are, he has to focus on his positions because that's what he's really looking for. On Monday, with a little bit of luck and a hope and a prayer, we're going to have Jim Bartolione on because he asked to come on the show because he's got something that looks really interesting and he wants to discuss it with us. And that happens to be none other than our good friend, natural gas. And he thinks he's found the cycle that is working in natural gas. And natural gas has had a pretty good rally of about 45 handles off of the low at 2.04. Remember, we bought it at 2.86, thinking it was going to be the trade of the year. And about 4 hours later at 2.076, we were in the history books, not going short. Like the old adage says, sell what goes down and buy what goes up. And it dropped all the way down. Believe it or not, folks, 72 handles. Can you imagine staying with that thing for the whole thing all the way down? Hello, operator. That's not much fun at all. That is really not much fun. Now, when we come back, I'm going to do something a little bit differently. I had a request from a gentleman, a young fellow, and he's having some trouble with his trading, and he asked me to take a look at what he was doing. And I said, all you have to do is to send me your trades, your P&S statement, and I can tell you exactly what you're doing. And then I'm going to give you the story behind it when we come back from the next break. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'm going to show you a P&S statement from, this is from Interactive Brokers. This gentleman lives in Albuquerque, New Mexico. He's a nice young fellow. I think he said he was in his late 40s. Anyway, what he's doing here is he has done, since the beginning of the year, he has had 249 trades. That's in 39 trading days. So I told him if he send me this report, I can tell him exactly what he's doing wrong. And when I first looked at this and he called me early this morning to get the report, I said, I know the first 3 things you're doing wrong is, one is, I said, you're staring at the machine every day. Number 2 is you're looking at your equity every time it goes up. And number 3 is every time the market moves you against you a point or two, you're going to get out. And he said, how did you know that? And I said, well, after looking at 10,000 statements over a period of about 50 years, I can see what's happening because a person gets scared. This is an easy game, folks, if you play it without money. It really is, because money is how we keep score, and that's where the problem lies. Years ago, we used to get our equity runs early in the morning. We didn't even know where we stood until early in the morning. But now you have it instantaneously, and you get to see that you just lost $3,000 in 30 seconds when the Fed made a decision, right? And he's staring at the machine, right? Okay, but stop and think of this, folks. He's doing 7 trades a day. He's not paying much commission, as you can see, but he's only been right on about 30% of his trades. And I told him, I said, you got a chance to be a really great trader. And he said, how can you say that since I'm down $1,400 for the 6 weeks? Stop doing everything wrong. A, stop looking at the machine. 2, plan your trades better, right? Is that correct? And I said, do you have my book, Trade What You See? I said, yes. I said, have you read it? He said, well, I've read part of it. So I told him 2 things to be successful. Finish reading the book. Stop trading today until you understand what you're doing. You don't know what you're doing, so be realistic about it. 6 weeks is long enough, especially with 249 trades. That's not trading. You're trying to scalp. And he says, well, I'm trying to add to position like Tom Hugard does. And I said, wait a minute. I said, you're comparing yourself to Tom Hugard? I said, Tom only trades really strong trending markets, and these kind of markets that you're in are not even moving all at all. They're going up and down just enough to take your stops out and get you shaking in your boots. So if you do three things, find a system, and the ABCD system is just one of many. You could use a lot of different ones. Moving averages work great if you know how to use them. Basil does, so does Steve Rhodes, so does Tom O'Brien. I don't use them. I use ABCD. I'm a one-trick pony, but I like that pony. He's running in the Derby, by the way, the first Saturday in May this year. I'll tell you the name of it. We had to disguise it because people realize what a absolute lock he's going to be to win the Derby. But I'll tell you later, probably the Friday before the Kentucky Derby. And if you believe any of that, folks, my medication stopped working early this morning, and that's probably the reason for it. So if he'll do those things, and we're going to follow through with him. I ask him, look, I'm not charging you for this. All I want you to do is to do what I ask you to do. Come back with me after 2 weeks and see if you've made any change. And you can't do any live trading until you understand what the ABCD program is and go through my book. And there's other books about this stuff too, but just go through and find out how easy the ABCD pattern really is. That's all I ask you to do. So he said, okay. And I said, that's one of the reasons, why I do this kind of stuff, is that if I can change him around, that'll be something. I know he's going to make it because he's making all the little mistakes to take his money away. And that's the reasoning, not to get along with it. I mean, that's no problem. Now, if you'll remember, we had a couple of trades on this week that we were telling you about. One of them was cattle. And I wanted to go through the cattle market today because we were saying that we have all these ABCDs in the April cattle finishing up here at the 166 level. Well, we got to 166 and we backed off about a point. And today we made a high at 166.20. And now we've taken out the lows of the last 2 days. Okay? And now what you're looking at is you're looking at something that has a pretty good chance. You've already up $700. So what you want to be able to do now is put your stop at break even, which would be at 166. Well, you're up about $500, not $700. Anyway, that's what you'd be watching. We had the same type of trade going on in soybeans, and soybeans had a big break. And I want to show you the headlines on this because Rich Anderson was chuckling about it because he had been on the show, if you'll remember, last week saying that the acreage report was going to be coming out and it was going to be something that was supposed to be, pretty exciting and really good. And boy, I hope I got that acreage report thing in here because I made a copy of it and boy, I can't find it. I just have too many things in here to look at, boys and girls, and that's why it's too hard for me to get them all up here to show you. Basically, what it said was that the acreage was going to be increased by 3.4 million acres, which was a huge amount. Wheat fell out of bed, corn fell out of bed, and beans fell out of bed. And that's really what's happening. We booked a really nice profit today in the soybean oil, which was, very, very substantial, which was really fun to go through. See a trade like that work. But I'm still, right now, as we're on the air, we still got a half hour to go, and we're watching the Japanese yen is still trying to make a high. But folks, we just made a new high in the end, just a little bit. We're only 8 pips away from that 382 on that Japanese yen. I hope it gets there because I like to see perfection, but we don't always get perfection, as we know. So we'll be watching that one really closely today. Cause this is the World Series, folks. This is we're playing ball today in the World Series because if these things fail, and if they fail, that means they're going to go down big time. And nothing more is important than what we have in our Treasury bond market. We're going to come back. I'm going to spend a little bit of time here. I want to bring up the charts here on the Treasury bonds because we're within, we're 8 pips of the absolute low that we're waiting here in the Treasury bonds. Been talking about it all week long, Tuesday, Wednesday, Thursday, Friday. I just saw a trade here at 123.19. The low is supposed to be 123.11. I sent the video out on that last night. Even though it's the weekend, if you can buy it at 23.11, I would buy it at 23.11 and risk 10 points. Just risk 10 points. That's $300 in a contract that sells for $120,000. Now, the reason why I'm saying that is you have to go through the weekend, and anything could happen, and it usually does, but you're going to have to protect yourself. So if it gets there, then buy it 123.11. However, if you don't have a profit on that thing on the close today, and it's below 123.11, get out of Dodge. It's just not worth the risk, okay? It's just absolutely not worth the risk. I'm going to send a video out on that about a half hour before the close, if it's anywhere near there, to tell the folks this is what you have to do. It's not about how much money you make. It's how much money you don't lose. I'm going to be focusing on that for 5 hours on March the 8th. We're going to have a cameo appearance. Well, it's going to be more than cameo. Tom Hugard's going to pop in. And with a little bit of luck and a couple of bucks, I think we're going to have Mr. John Jameson come in and talk to us about the way he looks at options, because you talk about risk reward that he's done with these options is truly amazing, how you can buy them and then lock in a profit because of the fact that these spreads on these options are so wide that you're able to do that. Say, we're going to take a break. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I wanted to talk just a tiny bit more about the trading program that we were looking at from Leroy, the gentleman from Albuquerque. Anyway, the reason why I'm able to find out what these things are when you look at these sheets, I met Mark Douglas in 1983, and he had been hired by Merrill Lynch to go over all of their commodity accounts. There were 10,000 of them, to find out which ones were winning and which ones were losing and why. Well, of all those 10,000 accounts, there were just under 20%, around 17% of the 10,000 were making money. Okay, and so we went through each one of them, categorized them the time of the trades, how often they traded, wins versus losses, all of that stuff. There were 10,000. It took him a long time. I was able to help him. We lived in the same building there on Lakeshore Drive in Chicago and became the best of friends. And he was the best man at my wedding, and sure miss him to this day. My God, I can't believe it's been 5 years already. But anyway, we went through every single one of those to find out what was wrong, and you could see a pattern in trading. Back in those days, back in the early 80s, we didn't have this instantaneous pricing that you see here now. And the commissions, Merrill Lynch was charging $100 round trip on a commodity, $50 in, $50 out. Most of you guys are out there paying $2.50, $3. Okay, that's what's gone. And that's why our volume has gone crazy too. But anyway, with that price, a lot of those brokers at Merrill Lynch, they were churning the account. And you can tell churning right away by the times of the trade. If the guy puts it on and he's only in it for 10 or 15 minutes, paying $100 commission, it goes up, covers the commission plus a little bit of VIG or something, they'll take that, and you keep watching it over and over again. What happens is the broker does that, and he gets trapped in something, and the guy has to pay the pauper, and that's why he would call an attorney and say, what happened? Well, that's what happened. The guy was churning, and at that time, he just panicked, didn't get out when he should have. Instead of making $100, he lost $800. And when you're paying a $100 commission and it's a $10,000 account, it doesn't take very long to make the customers upset. So that's what Mark did. That's why he wrote the book, The Disciplined Trader. Later, he moved here to Tucson in '96 and worked together here for 7 years. And then he moved to up at the lake, up at Scottsdale. And that's where he finished up his career. Anyway, that's how I learned all about this. Later on in 1986, 87, and 88, I was doing expert witnessing with Eddie Horowitz, and I had that experience of looking at those. And after you looked at them for so long, you just see them automatically, what's really happening. And sometimes they try to disguise it, but it's not very easy to disguise because a trade is a trade is a trade. So that's pretty much it. Remember, folks, in the way this market works, it's basically the first line of defense, okay, is the Chicago Mercantile Exchange. That is the one that's the number one thing. Number two are the members of the exchange. Okay, number three are the clearing brokers, and number four, finally, are the customers. Fortunately, through almost all of these times, the customers have been protected. Not, like Madoff, that was a little different story, but people trading commodities, most of them have been protected. Russell Wassendorf, I forget what the name of his company was, name of that bird, Peregrine or something like that. He ripped off a bunch of people, me too, for quite a bit. But Jerome Brescherwald's son was the one that got hit the hardest. I was hit pretty bad, but nothing like Jerome. It was a life-changing event for him. Now, I've had questions about some of those stocks that we've been looking at, and they haven't changed at all, folks. We're looking at Tesla, Amazon, Apple. All of them are the same. Now, we're coming into this time frame right now, today, with a Friday, and we're sitting at the moment of truth here in the Japanese yen, which is money moving. That's that channel that we're looking at. I'm going to bring it up because it's that important. And remember, everybody wanted to own this stuff at 151. Now it's at 136, and it doesn't have any friends. So that's why it's so doggone important. Look at this thing. It's just in a perfect channel. This is basically ABCD, what we're looking at right here. Okay, now this didn't make the point here because this is really the continuation of this. What I'm looking at here is a 382. That's within about 8 pips from where we are right about now. So let's watch that. Very, very important, because if we don't get any higher than that and then back off, and if we back off a lot, then that tells us, pretty good bottom is being made in the stock market. And where are we? We're sitting right at the 78% level in the S&P, the 61% retracement in the S&P. I'm going to bring it up again because these numbers are how these algorithmic boys play. There it is right there at 39.47. So far, the low is 39.47 and a half. And I don't know where it's trading right now. The last time I saw it was like 59 or something like that. It got as high as 75, which was the 382. And then it's backed off. And if we get above 382, then you've got something that you can put your little pony on, get the little salad revved up, and you'll be ready to go. But until that happens, not so much. So that's it. And remember, we got the bonds really, really close there to that what is it? What is that pattern that we're looking at in the bonds? The bonds have been as low as someone told me 123.18 has been the low in the bonds. So that's another one that looks very, very interesting in this area right here. So those are just a few of the ones that we're paying really close attention to here today. And we'll do one at a time. But the only things that are really green today out there, from what they tell me, are the markets for the crude oil markets. Crude oil markets were sold off, and here again they held that support down there at the 73 level, and then rallied $3 a barrel too. So that's holding up. Whether that's related to anything that's going on with the war or not, I'm not sure, but. Neither is anybody else. So we have to do one thing at a time as we're looking at these things unfold here today. So hold on here 1 second, folks. I have to make one small correction here. I want to make sure that I have a order placed so that I don't have to mess around, excuse me, to mess around with it, and we'll see what's going to be happening with that. Now, someone asked a question about the wheat market. Now, I haven't had a chance here to update the wheat market, but it has been under a great deal of pressure. And you remember, this darn thing used to be, boy, they're just beating it up here. There's a perfect example. Here's where we were just the other day, folks. If you remember, there's your old 382s again. If you want to have some fun, you're going to be watching 382s till they come out your eyeballs when we do this trading day here on March the 8th. But look at that. There's a 382 right here in the wheat, a 382 in the wheat, a 382 in the wheat, another 382 in the week, and look at this. Now, folks, we got a chance here for a bottom coming up in wheat. There's drive 1, there's drive 2, drive 3. Sometime next week, early March, we'll be looking at the July wheat, not the March wheat, but the July or December wheat is the one we'll be looking at. But we're way below the 78% level and heading down. So we're going to find out how these things come out. And we had a pretty bullish report as far as planning intentions, but that's a long way out, folks. Planning intentions are not going to be ready here until about 2 weeks, believe it or not, if the land or the soil can thaw out. They couldn't be planting any corn here, folks. We're frozen land up here with the temperature 29 degrees here in the Pueblo. Pretty tough. And we got the what do you call it? The rodeo is here. Folks, I have that cowboy hat that someone gave me as a gift, but I'm about as far as a cowboy is as Robert De Niro is of being a Democrat. 877-927-6648. Billy Ray Valentine, Capricorn.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this last segment, I posted a chart here from Jim Bartolioni that was on a couple weeks ago when he told us about the NASDAQ banking index making that 382 retracement perfect ABCD. And those of you have realized since February the 9th that he was on, that it was been going down, ever since. So that's been quite a while. And I don't know if it's going to make a big move down or not. All I know that is a perfect ABCD pattern. The second part of this segment here that I wanted to talk about here, I want to do gold because gold is something we trade it all the time, and we're in 11 here in gold here that, and I'll just show you where we've been and where we're going. But this is where we've been the last few days. And again, if you follow, the ABCD approach, you can see we had a beautiful ABCD pattern right here in the gold right here. That happened to be the same 382 as this one right here. Then we had another 382 and another 382. And then, of course, we've had another one here today. And that tells us that we've got a very, very good chance. Let's get this up here so that we can all take a look at it. Has a very good chance. If you can see the final ABCD, there's your A, B, C, D comes down here. Roughly 1800 is what we're looking at. 1800 will be some type of a magic number because it's a round number, but the number is actually 1796. So that's the 1.618 expansion. Now, getting back to the gentleman that was kind enough to share his trading data with us. The main reason after Mark had gone through all of those 10,000 things, and he wrote his report for Merrill Lynch, which led to the book, The Disciplined Trader, because he kept notes on all this stuff, copious notes. I mean, he must have had 400 or 500 pages of notes. Drove me crazy. Anyway, basically the three reasons why people lost at Merrill Lynch. One was lack of knowledge about the markets. Number two, and most importantly, was a big asterisk, lack of money management of any kind, including stop loss protection. And number three, the lack of a trading approach. The lack of the trading approach was the least important of the other two. So that's why, knowledge of the market should lead to a trading approach, I would believe. But those were the reason behind it. So if you can correct those, of the three, if you can correct the poor money management and get a little bit of information about what the market's doing, you have a better chance of winning, wouldn't you think? Of course. And that's what happens. And once you realize that you can do that, you have that self-confidence that you're able to do it. And once that happens, that 9-inch cycle from your left ear to your right ear, you know exactly what that's doing. Are you going to win every day? Not a chance in heck. But I will tell you this, you're going to win more days than you lose. And as long as you don't do something really stupid, like adding to losing positions, the number one thing that you can do. If you do that, you're telling Mother Market that I know more than you do. I know where the market's going, and I don't need stop protection because I'm a really smart dude. Well, I've been there, done that. Not a good plan, folks. You got to have some place, whether it's a paper stop or a desktop, whatever you want to call it, or an actual stop in the market. There's got to be a place where you say, "Uncle," and then you get out of Dodge. So that's really, what we're looking at here as you're going through, looking at some of these different patterns and stuff that we look at today. Patterns are good, but they're not perfect. They're there to tell you when you're wrong. When you're wrong, you move on. That's basically what you have to do. So that's the main thing of trying to remember this stuff, but you have to have a trading approach, but you got to be able to do that because once you have that foundation of trust, then you know exactly where you are, and the rest of it is really, really easy. But money management takes precedent over any trading system, any market, at any time, because if you don't have any chips left, they don't let you play. Just like in Las Vegas, you lose all your chips, you get to go home, unless you work on credit, and that's not going to last very long because the odds are so stacked against you, okay? So I hope that helps to realize that these markets, they're certainly not perfect, but they are predictable within limits, okay? And guess what? They don't always work, but they work most of the time. Now, here's one we talked about last week because it was in the process of making a retracement here. I wanted to bring it to your attention because on Monday here, we had the big up, it was actually Tuesday, we had the big up move in copper where we went up to the 78% level up there at 418. Well, we've come all the way back down. We're trading back around $4 now because that was just a fake out. With the Dow Jones down 600, copper was up 10 cents. And the number of times that's happened, folks, it's an outlier event. They had somebody trapped in short copper. That's what it had to be because the next day it rolled right over, went right down with the rest of the market. So those are just inner factors that you want to pay attention to. Ask why they happen and see if they can continue. That's really what you're trying to do. Nothing more, nothing less. I did recommend one other thing for the young man to do, and that is to buy the book Trading in the Zone by Mark Douglas. That was his last book, the one that he wrote here in Tucson. But the reason why is if you'll read 2 pages a day of that book, it does 2 things for you. One, it anchors you in the morning that you don't know what the heck is going to happen to the market, and you don't need to know because you can't know. So once you realize you don't know what's going to happen next, you focus on how much you're going to have to risk to see if you're right or wrong. Okay? Now what happens, you get it locked into something and you just, like for natural gas, hello operator. That's my job. I mean, I got to yell and scream at you. This is not working. Get out. Just forget it. Go on to the next one. Like Grandma said, take 2 quarters in your pocket when you leave in the morning to go to school. If you don't find the girl on the first bus, try another bus. And that's what you got to do in trading, folks. Try another bus. And it costs a whole lot less than a quarter once you realize that the bus isn't working and you got to move on to the next one. That's an old Italian way of figuring out what the heck you're supposed to be doing. Okay, now here is a chart that we talked about early in the week because it was breaking down quite badly, and it was the crude oil. Someone's asked to talk about it a little bit today because we were expecting it to hold the 61% retracement, but in fact what it did, it came all the way down to the 78% retracement and then had the rally. So here again, if it doesn't hold, just like the S&P right now, if we don't hold 39.47, guess where we're going, folks? We're going lower. How much lower? A lot lower, but it ain't going to stop at 39.47. So remind ourselves, these patterns fail, and when they do, you can't stand in front of them. The first mistake teaches, the second mistake kills. The first mistake is you got a wrong position. The second mistake is you don't do a darn thing about it. And if you don't do anything about it, you're asking for trouble. And trouble is your middle name. If you're going to do that, you're not going to use stops. Keep your curriculum vitae ready because you're going to be looking for another job because not many trading firms are going to be doing it. By the way, this gentleman, he had his own account here, but he's also on a test program for a proprietary trading firm, okay, where they give him $100,000 to trade foreign exchange, and he gets to trade it. It's mainly day trading and stuff, and he's doing incredibly well there. And guess what, folks? It's not real money. Hello, operator. there's your answer right there. You start thinking of real money, that's not good. That's why averaging down is terrible. Goodbye house, goodbye car, goodbye wife. Not a good deal. See you in a few minutes, folks. 877-927-6648. Billy Ray Valentine, Capricorn.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. I posted the chart of the Japanese yen and the U.S. dollar. This is the big money, folks. This is Bernstein and Woodward. Follow the money. We're 9 pips away, folks, from the exact 382 on that whole move down over the last 3 months. So get above that. He's off to the races. It could stop right here, but maybe not. That number in the S&P is 39.47. Below that is 10 hats in the trenches, folks. That means you're going to have to go to war. So be very, very careful. We close above 39.98 today. That's got a really positive tone to the market if it can do that. I mean, it's a long way away, but we still have 2 hours to go. We can still do it. I just checked when we were off. We were at 39.62, I believe, the last time I checked. So we are a little bit above 39.47, but still a long way to go. But watch these next 9 pips here in the Japanese yen, because that's going to be very, very interesting to see how that unfolds as we get through this. Now, on Monday, I believe we're going to have Jim Bartolioni as our guest. Next week, we're also going to have Stan Harley as our guest, and I haven't penciled that in yet. And we're also going to have, hello, operator, let's get Jeff Hughes will be back with us. So that's it. And thank you for all the nice things you said about Mike Moore of Moore Analytics. He does a great job, and he, alerted us to these numbers in the crude oil, and also how to look at heating oil and stuff. All good information that we're able to use here. And I'm hoping someday we can get John Jameson to come in and show us how he does some of these options. It's really not as even I can sort of figure it out, even though I don't do any options. I will be doing them soon, but not right now. So I hope that helps. By the way, do something nice for your neighbors if you can, folks. There's still a lot of people, even in the area where I live, which is quite nice. Some of our neighbors are in deep trouble because they're on fixed income, and eggs are $7.99 a dozen here, believe it or not. 877-927-6648. We'll see you on the flip side tomorrow, and may God bless.